What will it take for gold to break out of its sideways trading range? I have Jim Wyckoff with me, Senior Market Analyst for Kitco. Jim, welcome back to Kitco.
Hi, Michael. Nice to be with you.
Look, we've had a real churn for gold. We started off August with some clear breaks through 2000, but in the last 2 weeks, I've seen really kind of this churn in the 1900 level. Can you tell us what's going on and what it's going to take for gold to break out of it?
Yeah, Michael, I think there's several things that have prompted the sideways price action in the gold market the past few weeks. First of all, you had much of Europe on vacation during the month of August, and trade in markets typically slows during that time frame, and including the precious metals and maybe the financial markets. Uh, Secondly, we have seen just a pause in a longer term price uptrend on the charts. And this pause is not bearish. It's not unusual. It's just markets don't go straight up and straight down. And we're just seeing a bit of consolidation. But finally, I think the gold silver markets have they may have factored into prices on a near-term basis all of the bullish fundamental factors that were driving them higher, and now they might need a fresh spark, such as a geopolitical event, maybe some new stimulus from the Federal Reserve, something like that. But I do think prices have not peaked. I think on a longer-term basis, you're going to see still higher prices.
Let's get into those catalysts in just a minute as we look toward in the fall season. But let's sticking with that again is that we now are in the fall season. People are back to work. Are we seeing an increase of volume? Are we seeing a little bit more clarity around this market?
Well, we're seeing some more clarity in the outside markets that are important to gold. We're seeing some higher volatility in the stock markets. The months of September and October are historically unkind to the stock markets. That could be a catalyst that could boost gold prices higher here in the near term. We've seen on the negative side, we've seen the U.S. dollar rebound a little bit just recently, and that's put a little bit of pressure on gold. So I think we are going to see more active markets in general the next couple of months, and that is going to make gold and silver more active themselves.
Can you talk about some major catalysts that you could see that could be moving gold coming through the fall?
Well, the U.S. election's coming up in November, and if there's any uncertainty regarding the outcome, if there's a dispute regarding the election, that's going to probably cause some anxiety in the marketplace, probably support gold. The U.S.-China trade relations are still strained, and the political relations are also strained. Just recently, we've seen the U.S. launch another salvo at China on some further restrictions. So that is always a factor. And then you've got the Middle East. That's always seeming like something's popping up every few months to unsettle the marketplace. You got North Korea. The other thing I didn't mention was all of this central bank liquidity that's been pumped into the marketplace the past several months. That augurs for problematic price inflation down the road. And I think the inflation trade for the metals markets as well as other raw commodity markets could come into play here in the next few months to support the gold market.
Is there also a concern from the broader market? Because this has been an unusual rally that we really have seen the gold being in lockstep with a broader uptrend in the markets.
That is unusual, and I've had people ask me that question before, and I don't really think there's a good answer. It's on any given day, it's perplexing to gold market traders. You look at historical price action, for example, just recently when the stock market sold off sharply. You would think that might cause some anxiety and some flight to safety into the gold market. Didn't happen. A few months ago, when we saw the stock markets rallying on some bargain hunting, you saw the gold market rallying too. So I can't explain that. I really don't think anybody can. It's just the way the market is at present.
Let's just talk about the other precious metals. How is silver looking right now?
Silver's looking just as bullish as gold. They're about the same. Now, the fact that the gold and silver markets have paused here in recent weeks, I want to emphasize that's not, from a longer term perspective, that's not bearish technically. It's just a pause in a longer term price uptrend. So the gold and silver markets are still looking pretty bullish from a longer term technical perspective.
Let's finish on your today's note. You're also talking about copper and it having a near-term technical advantage. Can you tell us what's up with copper?
Yeah, copper's been trending higher for several weeks now, if not a few months, on a longer-term basis. The red industrial metal is very important for commercial building. And I think I follow about 30 markets, so it's kind of hard for me to remember exactly what the time frame was on the recent high in copper, but I think it was like a 2.5-year high that we've hit in the copper market in the past few weeks. So that suggests strong industrial demand for the red metal and to suggest still higher prices coming.
He's Jim Wyckoff. He is a senior market analyst for Kitco. Jim, thank you very much for your time.
You betcha, Michael.